Hello everyone and welcome to my first video. In this video we are going to discuss a trading plan I've posted on TradingView on the 18th of September. The trading plan is based on the USD CAD currency pair, and today we are going to do a dissection of this plan, and I will try to show you possible entries based on it on the H4 time frame as well as on the M30 time frame. If you're not familiar with the dissection of a plan threads I post on our blog, you can check the link in the info below. I will also post a link to the plan in the info so you can see how it developed directly on TradingView. So without further ado, let's get to some dissecting. As you can see in our plan, I have outlined two buy zones and one sell zone when the price was in the blue rectangle. I was more inclined for a bullish development here, although it is best to always be prepared with a backup scenario. That's why I have added the sell zone. As you can see, when the plan was posted, the price broke out of this blue rectangle of its, you can call it consolidation or range, and the Bollinger Band started to open up, starting their new phase. Now, this would have been our first good entry point. Our stop loss should be placed outside of the box, which meant that our entry should have been at a price of 122.34 right here. 34, and our stop loss should be at a price somewhere around here, which is at a price of 121.48. Now, as you can see, price moved up slowly after that, covering our first buy zone without giving us any good entry points. Not on the H4 time frame at least. As we can see, it reached the previous consolidation area, which acted as a resistance a few times. So right here, here. Many of you might think here, maybe we should stop our trade there. To be honest, I might think the same, but the price is showing us that it is not ready to stop the up movement by forming higher highs, as you can see here and here, and also by forming higher lows. After the price broke out of this resistance area, it went further up before making a correction, reaching back to that area. We can see that the price stayed above this area for a while, 16 hours to be exact, after which we had a new good bullish candle and the price ran off out of that area. Now, this would have been our second entry. In this case, I recommend entering with a less investment, of course, because we are getting close to a strong weekly resistance level, and our stop loss should be placed either below this area, somewhere here. Let me just change the color so you can see it clearly. Or around the middle of it, So somewhere here. Since the price didn't take much time spending inside of this area, and when it finally broke it and retraced back to it, it didn't enter inside of it. I don't expect the price to quickly retrace back inside of that consolidation area. Not only because it ran away very quickly from it, but also because there is still room for the up movement. So if you want to play it safe, you can put your stop loss below this area, which now acts as a support level. Or you can, if you want to risk it more, you can place it like in the middle of it. But don't forget that you should enter here with less investment. So our entry would be with around 0.5 to a maximum of 1% investment. As we can see, after the move away from that consolidation area, the price kept moving up, made a small swing down here, before making another swing up. Now, we should have closed our positions when the price broke this top. So, we should close our positions on this candle. For those of you who want to bag the whole profits of the two positions, you can cut the whole positions, but my recommendation would be to close 80% of both positions here and put your stop loss at break even. That way, if we get lucky in the long run and the price breaks out through this weekly resistance area, we might squeeze in some more profits of this movement. In this case, our stop loss at break even of the second entry would be hit somewhere here, and our first entry, which was here, would still be running. So this would have been our long-term approach regarding this plan. And now let's talk about a more day trading short-term approach by looking at the M30 time frame. Let me just delete those. So you can see better. And I'll be right back. Hello again. So we're going to discuss the M30 time frame now. I have already outlined our possible entries with stop losses and where we should close our positions, so it will be faster and easier not to draw while I talk. So as you can see here, again, our first entry would have been the break of this range formation, consolidation formation, depends how you want to call it, and also the break and the expansion of the Bollinger Bands. Now I would place my stop loss right here because this was the last bottom, below the last bottom the price made before breaking. As you can see, the price moved up, went a little bit down and formed a nice Bollinger squeeze here again, from which it exploded. Now in this case I wouldn't recommend entering here for two reasons. First, because as we can see, the price reached this previous consolidation area that acts as a resistance area. And also, if you enter here, your stop loss should be placed way down over here, and this won't give you good results in the long run. So we waited, the price bounced of this resistance area, went down back to that consolidation here, from where it exploded. Now we had two scenarios here. If the price broke out of this previous consolidation, we won't open any more positions and we should close our first position, which we took here. In this case, the price moved out of that area with a huge bullish candle, so we can use that bullish candle, which was also an engulfing here. We can use it as a second entry. And again, our stop loss should be placed either below that area or below the lowest price, the lowest point the price made. As we can see, after the break, the price kept moving up, went back up again to that resistance area, but it stayed close to it, after which it broke it with three nice bullish candles. The third one, not only that it broke out of the resistance area, but also opened up the Bollinger Bands again, entering a new phase. So that would have been our third entry, and I would place my stop loss either below or a little bit inside below those lows the price made here, right here. We can see that after the break, the price moved up, went up to that weekly resistance area, which is huge, so we expect the price to move further inside of it before a possible correction is made. In this case, on the 30 minutes, price went down, reached exactly above that resistance area which was broken, formed a nice consolidation, which again was broken with a huge bullish movement, and we had the Bollinger Squeeze expanded. So this could have been our entry number 4. Of course, here it's a lot more riskier now since we are close to that weekly resistance, so we should enter with a very small amount of investment. Now I would place my stop loss, as you can see, below this consolidation area here, and just wait for the price to move up or to give me a signal to close my positions. As you can see, the price kept moving up. After that, it moved again a little bit down, reaching almost to that square it formed here without going inside of it, and then made a huge movement up after again a small consolidation period. Now in this case, this is the worst place you can enter, and this is again mainly for two reasons. First of all, we are already inside of the weekly resistance area, from where we expect a more long-term correction. And the other problem here is that your stop loss should be placed all the way down here. And this is a huge difference from the stop loss to your entry point, and you can win possible one-to-one, mostly, if the price reaches all the way to the top of the weekly resistance. So that entry is a no-go. As you can see, the price moved up, consolidated here for a while, went down, consolidated again, after which it broke this high. This is the previous high the price made. Now this can give us information that the weekly resistance area will be respected and we'll possibly see a correction on the higher time frames, even on the weekly time frame or daily. So for our M30 trades, this means that we have to close them right here. And that, my colleagues, is the end of this trading plan dissection. I hope you enjoyed the video and possibly learned something from it. I will continue making more videos in the future months, so hit up the subscribe button below. Also follow me on TradingView if you want to see my trading plans, and on our Twitter page where I post live signals based on those plans. I am posting in the links in the info below. I wish everyone a nice weekend and a profitable month. Thank you.